Guys, this is S&P 500 weekly technical analysis for the week of June 3rd. The S&P 500, Dow Jones, Nasdaq, all of these indices were trading bearish until 3:30 p.m. Eastern Time on Friday. Then at 3:30 p.m. Eastern Time on Friday, there came a very heavy bullish retrace. This heavy bullish retrace was because of Goldman Sachs, Microsoft and Home Depot primarily. Microsoft gained more than 2% in just half an hour, and because Microsoft is the top contributor to the Dow Jones as well as the S&P 500, this is why 2% bullish movement, bullish retrace in the Microsoft compelled the Dow Jones and the S&P 500 and the Nasdaq to give an abrupt bullish reversal. And the same movement was supported by Goldman Sachs, Home Depot and other tech primes. However, the real question is, will this sudden reversal in the entire US stock market in last 30 minutes, will it change anything? Then no, it is not going to change anything. Nothing will change as such. Now, why I am saying that it is not going to change anything? Because the S&P 500 and the Dow Jones on the weekly chart have closed in the open equal to high condition. And in my final update to my Patreon community members, I've clearly mentioned that it doesn't matter that where the S&P 500 and Dow Jones are going to close, because in any case both of these, the S&P 500 and the Dow Jones, are going to close in the open equal to high condition on the weekly chart. And this is very special, and this means that the next week means from June 3rd, that either there will be a gap down open or irrespective of any open and initial bearish movement, and this bearish movement can be seen on Monday or for the entire day. So guys, I will discuss the weekly chart, the daily chart, everything in detail whatever I have mentioned here, and the impact of this, the movement in the coming week. So I will discuss everything here in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, before I discuss the agenda of this S&P 500 weekly technical analysis and the weekly chart and the probable movement, let me quickly recap what we were anticipating in the previous week and what actually has happened. So this was the previous S&P 500 weekly technical analysis, and here you can see that we were anticipating, or we were expecting, the repetition of the pattern that we have seen in the Dow Jones on the weekly chart, that there were two bullish candles, one heavy bearish candle and the next heavy bearish candle. The two bullish candles, one heavy bearish candle and a heavy bearish candle. And this is the chart of the Dow Jones. If you notice, this was the pattern that we were expecting or that we were anticipating, and we have seen exactly the same in the picture. So the movement of the S&P 500 and the Dow Jones as it was expected. Okay. However, the most important part, or the most important question, is that why there was a bullish reversal. This was my second update to my Patreon community members on May 30th. That was Thursday, and I mentioned that today Dow Jones hit the absolute saturation through the SRSI's K channel. SRSI means stochastic RSI K channel, which is now trading at 0.00. This means that today onwards, any day, anytime, any moment, the entire market can get a bullish retrace or bullish reversal. So on Thursday, only K channel was saturated, but on Friday, both K and D channels of the stochastic RSI hit the saturation. Now the next important question in the S&P 500. S&P 500 came down, hit 5191.68, and then there was a reversal. What is so special about 5191.68? This was my first update to my Patreon community members, which is given at 10:30 a.m. Eastern Time, just 1 hour after the market comes into the session. And here I mentioned that the S&P 500 is now trading below the 200 hourly moving average. This clearly means that the S&P 500 is under pressure in a manner that this support might not be able to hold, rather it will be 519290 only. So S&P 500 will come down, and 5192 5190 zone, this small zone, will be able to handle the fall, and exactly you can see an exact hit to the zone. Anyways guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these, the daily updates, the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart, as I mentioned, open equal to high condition S&P 500 and Dow Jones, and because of this special condition we are anticipating a gap down open on Monday, or irrespective of any open, and initial bearish movement or the bearish movement for the entire day. I will discuss the conditions and everything, okay, here on the weekly chart. And yes, on the weekly chart there is a little change in the stochastic RSI, a bearish crossover in the stochastic RSI in case of the S&P 500, okay, that I will also discuss, and a slip in the MACD, okay, again. So weekly chart means the long term picture, the big picture, okay, 1 month, 2 months or a quarter or so. The second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart there is a little change because S&P 500 was coming down, then okay, it got a reversal, but this reversal is not going to change, okay, these technicals as such, because now the MACD is bearish, stochastic RSI is bearish. So this reversal, okay, it will not be able to create much impact, okay. It may try to push the S&P 500 a little higher, but now the entire market is under pressure and again it will come down, okay. I'll discuss these conditions here in this on this daily chart. The third point of the agenda is the probable movement of the S&P 500 from June 3rd, which is Monday, to June 7th, that will be Friday. So I will give you the condition. I will discuss there's the upward movement, there's a downward movement, okay, the limits, the levels, okay, and these are technicals, the Ichimoku cloud, everything, okay. Just like last week we were anticipating that there was a pattern in the Dow Jones, okay, heavy bearish, then bearish, and the same pattern was repeated here, okay, in the previous week also. So now I will discuss, okay, these the patterns and everything, and I will tell you that what we are expecting in the coming week, okay, upper level, lower level, okay, etc. And guys, there is one more thing that I discussed the probable movement in this part also, the weekly chart, and this part also, which is the daily chart, okay. So it's like that I already covered the 50% of the probable movement in these 2 points of the agenda, first and the second, and then the rest of the probable movement 50-60% here in the last point of the agenda. So I request you to watch all of these the 3 sections in order to get a clear idea of what we are expecting to happen in the entire US stock market, and it is not just related to the S&P 500 but also to the Dow Jones and the Nasdaq. So when I analyze the weekly chart, daily chart, and this the probable movement, then the picture is quite clear. So guys, now I am going to begin with the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. Now guys, we are here and this is the first point of the agenda, and this is the weekly chart. Let me write it down. Weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, okay. So before I discuss the candle, okay, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, on the weekly chart, this is the candle, last candle. It looks like a bearish hammer. But the most important part of this the candle is the open equal to high. Open equal to high means immediately upon open it came down, okay. So the open price was 5315.91, okay, and this was the high, okay, for the entire week. S&P 500 failed to breach this the price. What it means? This means that there is a very heavy pressure, okay, there is a very heavy pressure on the S&P 500 and on the entire market in a manner, and this means that even though there was this the heavy reversal in last 30 minutes, okay, but because of this heavy pressure, any bullish reversal will be restricted, will be limited. Rather, there are very good chances that it will come down again. When we look into this the candle with the previous candle, okay, previous candle was a doji, it was a bullish doji, and the same I mentioned in the previous S&P 500 weekly technical analysis that it's a bullish doji. What does this the bullish doji means? It means a reversal. Simple. Bullish doji means a reversal. Okay, and we have seen a reversal, and then the reversal was seen in open equal to high condition. This means that this bullish doji, okay, it was very strong. That is why there was a reversal, and that reversal was in the open equal to high condition. So this candle, these two candles, okay, the impact of these two candles will still be felt in the entire US stock market. Okay, now let's talk about the technicals. In terms of the technicals, on the weekly chart, okay, moving averages is still clear fan out, bullish, okay, Bollinger Bands, Ichimoku cloud. Now let's talk about the most important part here. Okay, the most important part is the MACD. MACD was trying to give a bullish crossover, but it failed. Because of this bearish candle, it has formed a slip. Although this slip will be confirmed only if there comes a very little green candle, okay, or a red candle of any type or any kind, okay, then this slip will be confirmed. Okay, but for now we can clearly see that there is a slip in the formation. Okay, so now this is important, and so yes, so this is the bearish MACD. Bearish MACD means, okay, bearishness. Now what was the purpose of this, the heavy 30 minutes? This is the 30 minutes, last 30 minutes movement in the Microsoft, okay, Meta and Goldman Sachs and the Home Depot. Okay, so what actually happened is that when the S&P 500 was trading around 5210 or so, that time there was a clear crossover, confirmed crossover in the stochastic RSI. Okay, and if you have subscribed to my YouTube channel for last many months or years, then you know that whenever MACD is bearish, stochastic RSI is bearish, entire index or the entire market comes under pressure. Okay, and the same condition is for the bullish, right? So here MACD plays the most important role, okay, or the most there's a critical role. Okay, so now even though there is no crossover in the stochastic RSI, okay, but again if there comes a little, very little green candle or a red candle of any type or of any kind, in that case 100% there will be a bearish crossover. Okay, and that will also force the MACD to give a strong slip, and MACD strong slip means S&P 500 will decline and will be coming down to 5120 or 30 or so. Okay, this is there. Now yes, so stochastic RSI is bullish in terms of the saturation, okay, and these things. Okay, this it was getting saturated, but now, okay, it is not. However, through these the technical indicators, it is clearly bearish. So now on the weekly chart of the S&P 500, we can say that S&P 500 is 65% to 70% bullish, okay, on the weekly chart. But now when we look into the Dow Jones, okay, so it is actually the Dow Jones which is creating problem for the S&P 500 for the entire US stock market. Okay, so S&P 500 and the Nasdaq, these are the pure tech indices. Okay, and Nasdaq is 100% pure tech index. S&P 500, okay, in the recent times it has become pure tech index because the top 7 or top 8, okay, or the 40% of the index, top 7 or 8 companies are the tech companies. Okay, Nvidia, Microsoft, Apple, Google, Amazon. Okay, so 40 or more than 40%. So it is again, okay, a tech index. Okay, now this is the Dow Jones. Okay, and guys, once again, if you are new to my channel, then the purpose of discussing the chart of Dow Jones, okay, is to get a confirmation that whatever we are expecting in the S&P 500 to happen, it will happen. Okay, but because if the Dow Jones opposes that movement, in that case that will not happen in the S&P 500, then something else will happen. Okay, so just like last week, okay, there was this the pattern, this pattern, okay, it was repeated as we were expecting. Because of the repetition of the pattern, the S&P 500 came down. Okay, now Dow Jones, okay, candle. Here in case of the S&P 500, you will notice that S&P, the closing of the candle is above all of the moving averages. Okay, but here you will notice that the closing is inside the moving averages. Okay, it is, and it shows a struggle, okay, and confusion in the market. Okay, So, and other than that, it is not bullish as such, okay, as it was supposed to be, miss as it was seen in here, okay, on the weekly chart of the S&P 500. Now here the most important part, okay, and that is why we always refer to the Dow Jones. A slip, bearish, okay, crossover, bearish, right? That is why we refer to the Dow Jones, because this picture was not clear here in the S&P 500. Yes, what we can see is that a slip is forming, okay, or the slip is in formation in the MACD, but in case of the Dow Jones, okay, it is already there. Okay, it is already there. This means that most likely there are very good probability, very heavy probability that a bearish slip will form in the S&P 500, because it is already there in the Dow Jones. Okay, now here another important point is, until last week, okay, last week, the stochastic RSI was bullish, okay, just like what we have seen here, that it is bullish, okay, same kind of situation was there, okay, but because of the formation of this candle, okay, there is a clear bearish crossover. Now the picture and the situation has changed here. Most important part is MACD is bearish, stochastic RSI is bearish. This means that the entire US stock market, including the S&P 500 and the Nasdaq, are under pressure, because Dow Jones is under pressure. Okay, that is why the last 30 minutes movement, that very heavy sudden movement, or we can say a kind of manipulated movement in just 30 minutes of very heavy volume, okay, it is not going to change, okay, anything as such. Okay, so now we have seen MACD and everything, okay, candle, okay, exactly same, okay, as it was seen in the S&P 500, but this candle is different because the closing is in between the moving averages. Okay, that is why it is different. So overall here on the weekly chart of the Dow Jones, we will say that the Dow Jones is 70% to 75% bearish, whereas S&P 500 was 65 to 70% bullish. Okay, now you can clearly see that these two indices are just opposing each other. Okay, but now because of this heavy bearishness, if the condition doesn't improve in the Dow Jones in the coming week, then definitely the entire market, okay, it will come down. It has no other option, because there was this the recent data, PCE data and the core PCE data, okay, and the market failed to get any kind of bullish momentum, or any kind of sentiment, bullish sentiments through the PCE and the core PCE, because it was neutral, because it was same as it was in the previous month, and it clearly indicates that there is clearly a disconnect, okay, between the Wall Street and the Feds. Wall Street is expecting a rate cut, okay, by September, and Feds are saying that there will be a rate cut by next year, in the first quarter of the next year. Okay, so what we have seen, 70% bearish, okay, here, and 65 to 70% bullish. But once again, do not forget that the candles, both of the candles are in the open equal to high condition. So this simply means that because of this condition, we are going to see either a gap down open, okay, or irrespective of any open and initial bearish movement on Monday. And if the market remains under pressure, if everything goes well, then on Monday, okay, we will see the bearish movement for the entire day. Okay, and if there won't be any bearish or bullish movement, then there will be a tug of war, and in that case there will be a very small candle. Okay, it won't go anywhere, just up down, up down. And if you're my Patreon community member, okay, then on Monday, in the once the first hourly candle forms, then I will confirm, okay, whether we are going to see a tug of war, okay, or any movement, right? Now guys, I have one more information to share with you. This is my S&P 500 knowledge transfer program, or the stock market knowledge transfer program. Through this program, I teach the movement, strategies, trend analysis, technicals, predictions, support and resistance levels, okay, means predict the movement even before it happens in the stock market. Okay, and the motto of the program is to help you become self-reliant, and this program is delivered one-on-one basis only. And because we are going to talk about the technicals, the movement, okay, strategies, patterns, okay, recognition of the patterns, that is why whatever I am going to teach here, it will be applicable to any stock, any index, any currency pair, commodity, crypto, or whatever is traded in the in the stock market. And this is my email address. Okay, whenever you want to participate in the program, or if you have any questions, you can simply send me an email. This is the Google spreadsheet. More details are there in this the Google spreadsheet. And when you open this the Google spreadsheet, then you will see that I have mentioned everything that I'm going to discuss here, okay, or I'm going to teach, okay, from the basics to the advanced, okay, including my modified technical indicators, okay, the options and the options trading strategies, okay, everything, and how to predict the movement even before it happens, how to recognize the patterns, okay, each and everything. And these are some important terms and conditions, okay, and these are the snapshots of the meetings. And guys, once again, this is my email address. Whenever you want to participate in the program, you can simply drop me an email, or if you have any questions, then also you can ask your questions. So guys, I have given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And this is the daily chart. So here I will do the technical analysis of the S&P 500 on the daily chart. So guys, before I discuss this, the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's first discuss the candle. If you look into the candle, it's a good bullish candle. It's not a heavy bullish candle. It's a good bullish candle because there is a long wick. Okay, and the closing of the candle was almost equal to the high of the candle. So all of this indicates that there were bullish sentiments in the market, in the S&P 500 at the time of closing. And if these bullish sentiments are carried forward to Monday, then we might see irrespective of any open, the S&P 500 will try to move up. Okay, there is no confirmation on the gap up open. Okay, what it indicates that irrespective of any open, it will try to move up. Okay, what it means. So in the first point of the agenda on the weekly chart, what we have seen that we were expecting a gap down open, or irrespective of any open, an initial bearish movement, okay, or the bearish movement for the entire day. Okay, this is the daily chart. On the daily chart, there is no confirmation on the gap up. The only confirmation is that irrespective of any open, it will try to move up. This means that if there comes a gap down open, okay, then immediately upon open, it will try to move up. Now this upward movement may be like 0.1%, 0.2%, or anything, but it will try to not to come into the open equal to high condition. There are very less chances that this condition will be seen. Open equal to high means open and fall. Okay, so because of this particular condition, open equal to high, okay, there are very few chances it will be seen. Immediately upon open, it will try to move up. Okay, but then the bearish pressure of the weekly chart, okay, it will play its role, and the bullish sentiments at the time of closing. Okay, so there will be a kind of tug of war, but eventually it will be the weekly chart that will supersede the daily chart. Okay, means more into the bearish side. Okay, I will discuss this thing in the next point of the agenda in detail. Okay, so this was the candle, and now let's look into the technicals. So in terms of the technicals, again, as I mentioned that there is no change as such. Okay, even though there was very heavy manipulated movement in just 30 minutes, very heavy, okay, movement, but there was no change as such, because if you notice, moving average is bullish, okay, Ichimoku and everything indicating bullish, but the most important part here is this is the MACD bearish, this is the stochastic RSI bearish. Okay, so there was one thing that was about to happen. Okay, or if you are my Patreon community member, okay, then remember I mentioned in the second update on this day on 31st, okay, that the 4 hourly charts are absolute saturated, K equal to D equal to 0. This means that after 1:30 p.m. Eastern time on this particular day, on Friday, we are anticipating some bullish movement because 4 hourly charts were saturated, right? and when S&P 500 was trading red, okay, I'm talking about the daily chart, then it was going to hit the saturation. So 4 hourly chart has played its role, a bullish reversal movement, fine, okay. But here, because of the formation of this bullish candle, the stochastic RSI, which was earlier coming down to hit the absolute saturation, okay, it is not going to hit the absolute saturation anymore, okay. At least in next 3 to 4 days there will be no saturation. This means that if the bearish movement continues because of the Dow Jones, if it continues, then any kind of bearish movement, 0.2% fall, 1% fall, 2% fall, any kind of bearish movement for next 3 to 4 days, a free fall is allowed without any problem, without any issues, okay, because now it will not saturate the stochastic RSI, right? Anyways, so here the important part is the MACD is bearish. MACD is bearish, stochastic RSI is bearish, so there is a bearish pressure, okay, on the daily chart, okay, through the daily chart, okay, on the S&P 500. So what we can see here is that the S&P 500 is clearly 50-50, clearly 50-50 on the daily chart, okay. It is trading neutral, neither positive, okay, nor negative, but yes, even though it is 50-50, it is still in the bullish side because it is trading above the Ichimoku cloud, okay. This side is the bullish side, okay. It is still, and yes, one more thing, it is also getting the support of the moving averages, okay. That is another important part. So it is more into the bullish side even though it is 50-50, okay. But this bearish pressure, this will restrict any upward movement. Upward movement will be restricted or limited because of this, okay. Now let's talk about the Dow Jones. This is the chart of Dow Jones, okay. So the picture might not be clear as such, like 50-50, but it's still in the bull side also. Let's see what the Dow Jones is saying. Dow Jones crossover in the moving averages, bearish, okay. It has lost the support of the Ichimoku, all of the technical indicators bearish, 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 okay. Clearly through the MACD it is bearish, okay, and it has turned more bearish because now the numbers are negative. Stochastic RSI, because of this heavy, okay, bullish candle on Friday, okay, stochastic RSI is a little bullish, but still it is in the bearish side, okay. All of the technicals are bearish, bearish. S&P 5, sorry, this is the Dow Jones. So the Dow Jones is like 80% or 90% bearish on the daily chart. That is why I was saying that even though there was this the very heavy 1%, 1.5% bullish reversal in 30 minutes, but this has changed nothing, nothing as such. However, if there comes special candles on Monday, in that case this the change, okay, it will be realized. Otherwise, okay, no change, nothing, and there will be more bearish side movement. So what we have seen that 50-50 and Dow Jones is 80% to 90% bearish. So on the daily chart the market is bearish, more into the bearish side, okay. No, nothing, okay, no bullish as such, more into the bearish side. S&P 500, because of the tech stocks, Microsoft, Apple, Meta and all, it is trying to move up, okay, but no, the bearish pressure of the Dow Jones, okay, it will simply drag it down, okay. But whatever is going to happen or whatever will happen, I will keep you posted through these the daily updates every day from Monday through Friday if you are my Patreon community member. And if you are not yet my Patreon community member, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And guys, it's not just about these the daily updates, the daily precise updates of the S&P 500 from Monday through Friday, okay, but also I give these the stock market opportunities in the premium stocks of the US stock market, okay, the top 20 companies or the top 30 companies. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see that there are these two tiers. This one is daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting the daily S&P 500 analysis updates and the probable movement, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these the daily updates, the daily precise updates of the S&P 500 every day from Monday through Friday. And they are aware of what is expected to happen, what are the conditions for the bearish and bullish movement, and the levels and the zones for the reversal, for the support and for the resistance. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 from June 3rd, which is Monday, to June 7th, that will be Friday. And guys, once again, let me remind you that I have already covered 40-50% of the probable movement in the first point of the agenda, that was the weekly chart of the S&P 500, and the second point of the agenda, that was the daily chart of the S&P 500. So if you have skipped these sections, or if you have not watched these sections, then I request you to please watch those sections in order to get a clear idea of what is expected to happen and what is going to happen. Although I will cover most of the part here. So here in this the probable movement, a few things that you must understand. Number one, because in the previous week the PCE and the core PCE data was published, and the stock market failed to get any bullish movement, okay, or the momentum, okay. So I'm not talking about the last 30 minutes of bullish movement. No, that was manipulated, okay. So let's not talk about that. But for the entire day, for the 6 hours, okay, the S&P 500 and the Dow Jones, Nasdaq, everything was trading bearish. Dow Jones was a little bullish because of the K equal to D condition, okay, saturation, okay. It was technically supported, okay. So because the entire market failed to give any kind of bullish movement, okay, after this PC and the core PC data was published, this means that next week is a kind of blank. Next week there is nothing important, okay. Yes, next week the non-farm payroll data and the unemployment, okay, data, unemployment rate, it will be published on Friday, that will be June 7th, okay. But before that there is some jobs related data, but that is not much important, okay. So this means that next week we can consider as blank, at least until Friday. The non-farm payroll data, okay, it might not impact, but the unemployment rate definitely, okay, that is something we need to look into, okay. So this means that whatever was seen in the last week and the last week, okay, the movement of the market will depend on that movement, okay, or the sentiments that were there. Now let's talk about the movement, the momentum, levels, okay, and these things. But before that, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now in terms of the probable movement, okay, let's not begin with the S&P 500 but with the Dow Jones, okay, because this movement in the Dow Jones, okay, let me give you a clear picture, okay, what actually I'm talking about. See, this is the S&P 500. This was the low 4,900 something. It moved up and then it sustained here, okay. Whereas in case of the Dow Jones, the low was here, it moved up, it came down almost to the same levels, okay. But in case of the S&P 500, you can clearly see a disconnect, okay, a very big disconnect. But I'm not saying that this cannot happen. This can happen, okay, this kind of disconnect can happen. But the S&P 500 was supposed to come down to at least to the Chimoku cloud, okay. So this kind of disconnect, okay, that is acceptable. So Dow Jones came down to these the levels, fine. S&P 500 was supposed to come down to these the levels, okay. So this kind of disconnect is acceptable, means if there is a disconnect of 2%, okay, or so 1%, 2%, that is fine, okay, not a problem, okay, and in the same movement candles, fine. But if there is a big disconnect between two indices, remember Dow Jones is the prime index, okay, and Dow Jones generally, okay, it shows, okay, that what is happening in the economy, because there are 30 companies in the Dow Jones from all of the sectors, whereas S&P 500 and Nasdaq are the tech indices. So Dow Jones is the prime index, Okay, and if Dow Jones trades bullish, okay, then it will force S&P 500 and Nasdaq to go bullish, okay, no matter what. And if Dow Jones trades negative, bearish, then it will force the same in all of the indices to trade negative, bearish, because it is the prime index. Okay, now, so disconnect you have clearly seen, right? So what does this disconnect means? Okay, actually this means that the S&P 500 is overvalued and it is overpriced. Okay, simple. Now, yes, let's let's begin with the Dow Jones. If you notice, the Dow Jones is trading bearish in the bearish side. It was trading bearish side. It was trading bearish side. Okay, and everything was there. Now there is a crossover in the moving averages. So now what the Dow Jones should do so that it can help the S&P 500 and the Nasdaq. See, on Monday and on the subsequent days, okay, we need two closings, minimum two closings above the Ichimoku cloud, clear closings. Okay, if that happens, then we will say that yes, okay, this the bull side movement or the sustain or whatever movement in the S&P 500, okay, it can be accepted in some manner. However, just above this the Ichimoku cloud, there is a cluster of moving averages. Okay, and now the moving averages have given a bearish crossover. Okay, and moving averages, okay, they don't give the bullish or the bearish crossover every other day. It took, okay, means it takes like 3-4 days, 1 week, or you can say just 1 week, minimum 1 week to see a crossover. Now there is a bearish crossover. So immediately after this, the Ichimoku cloud, there is a cluster of moving averages, not one, but there are 3-4 moving averages. This means that we need two closings not just above the Ichimoku cloud but also above the cluster of the moving averages. Minimum two closings in this manner. Okay, when this happens, then only we will say that now whatever movement is there in the S&P 500 is acceptable, and when that will happen in the Dow Jones, then S&P 500, okay, will be trading, okay, in this the bullish pattern. So there will be a clear this the fan out, bullish fan out. Okay, moving averages, so S&P 500 will trade bullish, not a problem. Okay, so this is the condition for the bullish movement for the S&P 500, for the Nasdaq, for this, for that, okay, for everything. And if the Dow Jones gives these the two bullish closings above, okay, the cluster of the moving averages, okay, then highly likely it will sustain and then it will move up. Okay, and then it will force the S&P 500 and the Nasdaq to move up. Okay, so that's not a big deal. Now, this upward movement in the Dow Jones, in the S&P 500, this will be limited to the zone. There is a confluence zone. Okay, any upward movement for now in the S&P 500 will be limited to this, the confluence zone. A confluence zone. Okay, a confluence zone is a zone where an index spends most of its time, okay, and where there are trillions of dollars. So trillions of dollars means that if you notice 1 2 3 4 5 6 7 8 9 10 or so, okay, S&P 500 was trading in this the small zone. Okay, and every day hundreds of billions of dollars, okay, are traded in the stock market, okay, or in an index. So in these 9 or 10 days, trillions of dollars were traded. This means that now the zone itself is going to act as a heavy resistance for the S&P 500. This means that even if the S&P 500 try to move up, it will have to deal with the zone, and without breaching the zone, without giving a closing above the zone, it is not going anywhere. If it struggles, if it fails, then it will come down. Okay, and then this is the Ichimoku cloud where it is going to find the support. Simple. Okay, it can breach the confluence zone not on its own. No, it can breach the confluence zone with the help of Dow Jones. Only if the Dow Jones gives very heavy bullish push, then only that is possible, like this kind of bullish push. Otherwise, no, that is not possible. Okay, that is there in the bull side, confluence zone in the S&P 500. In the bearish side, okay, it is very, very simple, because Dow Jones is already 80% to 90% bearish. Okay, all it needs to do is to give a closing below the Ichimoku cloud, and then it will be 100% bearish. It will be coming down to 200-day moving average. It will drag down the S&P 500 to the Ichimoku cloud, and then it will come down. Okay, it will see good support here, okay, around 4,900 or so. Okay, and that will be the story. But in between this 5277 and 4,900, there are three very heavy support zones. Three very heavy support zones. Okay, this means that there will, if even if there comes a fall, a heavy fall in the worst case scenario, then also these three heavy support zones will provide very heavy support to the S&P 500. Okay, one support zone in the 52 axis, one support zone in the 51 axis, one support zone in the 50 axis. These three very heavy support zones. Okay, the S&P 500 has lost one of the support zones in the 52 axis. This means that this support zone is now not going to provide any good support to the S&P 500. Okay, so now when it comes down, then it is allowed to come down and to trade in 51xx. Okay, remember this 519290, this zone will provide the support to the S&P 500, but it is not a strong zone. A strong zone lies below this, the 519290, okay, like 1 or 1.5% or 1% or so. But still this 519290 will provide the support, will give the support to the S&P 500 whenever it comes down. And yes, for any more bearish movement to happen, S&P 500 should breach this support, as simple as that. Okay, yeah, yes, there is one more thing. When this support is breached, 519290 support is breached, this zone, in that case only Ichimoku cloud can hold the fall. Okay, otherwise nothing as such. Okay, there is a very strong support in between these two. Okay, that will be able to hold the S&P 500 for 1 day. Okay, 1 day or maximum 1.5 days. Okay, otherwise only the Ichimoku cloud can hold that fall. Otherwise, okay, there won't be nothing. In case of the Dow Jones, okay, only 200-day EMA, moving average. In case of the Dow Jones, only 200-day moving average can hold the fall. So this means that we are anticipating from the current closing, we are anticipating just 1% movement in the bull side, and also from the current closing around 3% fall, around 3% fall in the bearish side. So this means that 1% in the bull side and 3% in the bearish side in the coming week. And there is one more thing. There won't be any bullish movement, there won't be any good, any known or simply or any bullish movement unless the S&P 500 breaches the 5316. Okay, this was the open equal to high of the weekly candle previous week. And in case of the Dow Jones, it was 39029. It was 39029. There won't be any bullish movement or any good bullish movement unless there comes a breach. Okay, this week, the next week, or the next to next week, this condition will remain applicable. Okay, a bullish retrace or a bullish movement can be seen towards or up to this, but in order to get more bullish movement, a breach is okay, that is compulsory, that is mandatory, that must happen, otherwise there will be nothing. Anyways guys, whatever is going to happen, whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 from Monday through Friday every day, if you are my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So guys, this was S&P 500 weekly technical analysis for the week of June 3rd, means from June 3rd, which is Monday, to June 7th, that will be Friday.